Hey everybody, this is Rich Hanlin with Mortgage Ballers, and today I actually got the legend. I was able to hold her down in Scottsdale, Arizona, and you've got it. Yes, you're seeing it for yourself. It is Denise McManus, and yes, you're going to want to hear this interview. If you ever listen to interviews, you need to understand Denise has a very, very wide and long background and how she's used it to get to where she's at today. What she does, including just closing a $4 million transaction. How many people can say that they do $4 million in a year, let alone one transaction? By the way, if she'll explain it, probably multiple transactions, because when you deal in those kind of markets, you're maneuvering a lot of money at one time. Denise, thanks so much for joining me today. I appreciate it.
I'm so happy to be here. I love this mortgage baller phenomena. I love that I'm here with you. So thank you for allowing me to do this with you.
No, this is good. I'm glad I find you. You go 100 miles an hour, which is good. There's a reason why we don't get to talk very much other than passing via text message and emails. You're not one of the people like, I need to get you on the phone. I need to hold you down for an hour. It's like, I have a question. I need an answer now. I'm off and running. Your energy is off the hook. Tell everybody, how long you've been doing this? You've been doing this for eight years. You've been doing it for 30 years. How long have you been in the lending industry?
So I started this in 2020, and
Good year to start.
told me it was crazy. Yeah, it was by coincidence. I like to say I was really, really stinking smart, but it was just coincidence. I was transitioning out of a previous career that I'd had for 23 years, and everybody said to me, "Well, what are you going to do?" Because I think I shocked a few people when I said I'm done in that industry. And so, what are you going to do? And I said, I think I'm going to do mortgages, which says no one, right?
Right. Out of the blue,
And
I'm going to go into mortgages.
yeah, no, like sure you are. We're getting ready to have a meltdown. What do you mean you're going to do mortgages? So I did all my education, and then I think I did my education like February-ish or March, maybe, I don't know. And then went to take my test, and all the testing places were shut down.
I remember that.
I was like, well, can I do it at home from my computer? Nope. So I waited and I waited and I waited, and I took my test the second day the offices were open, because you could only have two people in a testing
Right,
center.
because of distance and all that.
Yeah, we had to be like 27 feet apart or something odd. Wear a mask,
85 feet. It was 85.6 inches.
whatever, right? So there was only two people at a time. So two other bigger ballers than me obviously got those seats before I did. So I was there on day 2, went in, sat down, passed my test, and I have not looked back since.
That's everybody seems to remember the day they got in. Mine was, September 1st, 1991. I left Southern California and I became a loan processor in Northern California for a mortgage broker, and didn't know anything I was doing, but I probably started that journey because back then we had to do everything. There was no automated. You had to know the guidelines, and the processors, the loan officers brought them in. We pulled the credit. We ran the programs. We spoke to the underwriters. We packaged them. We worked with it, and then we took it out the door. The loan officer just brought them in. If you did your job right, they wouldn't remember who the loan officer was. But back then, having to learn the guidelines and having to be, you had to, if it's not going to work there, I'm going to double app it to 2 different places so I don't have to waste time. That's back when appraisals, they would glue on the pictures. Good Lord. But I learned so much back then that now everything's automated, and people say, oh, it didn't work. I'm sorry, you're not approved. And I'm like, whoa, wait a minute. Let's take a look real quick. Why are you not approved?
Yeah, but that's the key to success in this business, though, right? I mean, is knowing how to structure a loan. It's not because, when I tell people I do lending or I'm a mortgage broker, they go, oh, God, I'm not good with numbers. Who said I was good with numbers? I mean, I do know how to work a calculator, and I do love a good spreadsheet. It makes my husband nervous when I start spreadsheeting things. But
Right.
it's like everything in life. There's a story behind every face, and you have to learn that story. But it's about structuring that deal, that loan. If you've really done your job and listened to what the client is telling you they want and what their current situation is with their employment, or how they get their income, or what their goal is with the next house, It's knowing how to structure the deal. And then from there, where to take that deal to get done. And I will tell you, and by the way, that's my dog snoring in the background. You can probably hear her.
Very happy dog, by the way.
She was very happy because I'm sitting here in my office with her today instead of being on the go. But I wanted to be stationary to do this with you today, Rich, instead of being in my car. That's really my office is my car. But I love being an expert because I love being part of the UWM family, and so I try and give every single loan to UWM. And even sometimes when I know there's a loan that probably isn't going to fit, I will still email Hayden and go, okay, Hayden, I really want to give you this loan. So before I broker it, I don't think you can do it, but before I broker it out, just hear me out. So maybe is there a way we can structure this so it would work? And he'll come back to me and go, Denise, not this one. Or here's how we can do it. But it's the success of doing loans today is really about structure. So to your point, when you got started, it was guidelines, guidelines, guidelines. And we do still have to understand the guidelines, but more than anything, it's listening to the client, figuring out the best structure for that loan, and then being aware of where you need to take that loan so that you get 100% approval rate. Nobody's got time for turn downs.
No, I agree. It's the same energy. And you might just answer this, but if you had to pick, what's the most favorite part of why you do what you do?
Oh gosh, that's easy because I make people happy every day. Like I know I used this analogy previously, but I feel like the FTD florist. A lot of times people will come to me and they've gone to other loan officers or banks, mortgage companies, and say, no, I can't do this. Why did they say you can't do it? And they'll tell me why, and then I'll start asking more questions, and I'm like, well, if we structure it like this, we can do this. And so that in those first 10 minutes or 20 minutes of building that relationship and finding out what the turn down reason was, if there's a way to get it done, we can get it done, especially here at Expert, because we have so many different outlets. And that's truly satisfying that it's rare that I have to say no to somebody.
No, and it's people come to me and they say, this is what the outcome I want. And I'm like, well, you're not going to get that outcome, but I can make it still work, but it's going to come out just a little bit different this way, but I can accomplish what you want. You just can't do it the way you, not everybody fits through that conventional 3% down or FHA 3.5% down or 0 down payment. And it's like, my job is to say, yeah, I can't quite get you that way, but what if we asked everybody for a little help, and for the next 2 months you save, could you have this much money by the time we close? And we go 60-day escrow, I give you a little help, everybody kicks it in. I can make that happen. What is the reason why it's not working? And on top of it, I know how to help people's credit realistically of what I can move them. If I get people to a 640, then I know I can get them FHA and or some type of FHA lookalike. But it's easier for me to take a person that it's like a 550 and work on them to get them to a 640 than it is to take a 640. No, I want the rate if you can get me to 740. And it's like, that's hard to get you from 640. But I can get you in the house and you're going to pay a small premium for your rate. Or we can go FHA and you're pretty much getting the same rate as a guy with an 800 score because they're not going to have the differentiation like conventional based on that score. And it's educating them that way, but you deal in some pretty big deals that the normal guidelines when you get into jumbo, especially super jumbo. Matter of fact, where did you take that $4 million deal? Where did you end up going?
Lenshore.
Lenshore. Okay.
I did with Lenshore, and it was a pretty smooth process.
Okay.
We have a really good AE there. She was on this deal, as most AEs would be, right? I'm from
right. Drop everything.
Yeah, makes or breaks their quarter, let alone their month.
Yeah,
so,
that's a good month.
We have a good rep there. It was a pretty smooth process, but the reason I chose Lenshore is because, again, it was a multi-part loan, and I needed a bridge on a departing residence to make it work. So
Okay.
Lenshore has a pretty good bridge. And also, by the way, as most people who are buying $4 and $5 million houses, they're self-employed.
Of course.
So I could do 1099s or I could do bank statements. So I had to go with a company that had a bridge that would allow alternative documentation for income. So that's why I took it to Lensure. So again, that's why, understanding not just the guidelines, but who can do what in a different way. I do a lot of bridge loans. That's kind of become a specialty of mine this past year. Um, a lot of agents refer business to me because in order for them to sell that next house, they either need to sell that or get the buyer under contract without a contingency of selling their existing home, right? Or they have to try and it's just messy. So here I come in, the loan whisperer, and I do these bridge loans on departing residences, and they think I'm amazing. They think I'm a hero, and I'm like, oh, it's not my money, but I know how to structure it. But I love Homelight. They've got a great bridge
Home
loan
Light does have
product,
good one. Yeah.
and then I can marry it with UWM.
Okay.
And so that's my dream situation. But not everybody is a conventional loan, and mostly Homelight is all conventional, as is for the most part is UWM. But society's not a conventional society anymore. We don't all
No,
make,
not even close.
no, and that's why it's great that we have these non-QM products, as we like to call them, because there's a reason for them. And a lot of times people say, well, you're just dealing in subprime. No, I'm not. I'm dealing in non-conventional lending because most of us make money via 1099 or bank statements or
Yeah, we
side
have
gig
gigs
work,
or whatever. Yeah.
whatever. I hairstylists, they all get paid by Zelle or PayPal or just, Venmo, whatever the choice is, and cash it used to be, right? But you've got to know you've got to know your audience and you've got to know where to take that loan. So, yeah, it
Well,
works great. Works great with it was a 3-week deal, by the way.
wow,
With
that's
Lens.
awesome.
Yeah.
What I've learned over the last, 10 years with my higher end people, dealing in those kind of problems. Number one, though, hey, I'm buying a $5 million house, but I need a $800,000 loan. The rest is all cash. I run into that. And then the other thing I run into is,
Which is not a bad thing, by the way, right?
not bad. It's just, I don't, people are like, oh my gosh, are you going to get a $5 million deal? No, because they're putting 4.2 million down. That's more my California people. But I also run into really smart people on their taxes, and they have investments that create front end depreciation, and it wipes out all their income, so there's no taxes. And so the taxes become worthless, even though it's the smartest thing I've ever seen, because they're legally using every ability available to them to mitigate taxes. And people say, oh my gosh, they're not paying their fair share. No, they pay in a lot of different ways, but they're legally doing what anybody else can do with the tax code and with different investments. Oil and gas, you can write off 86% the year of the investment. So you get an investment out of it and you get a huge write-off. So there's great things you can do. But when I get to that point, if I need to qualify for something, you're right. It's like, okay, thank God for DSCR loans if I want an investment property.
Love them.
But
Build
owner
them.
occupied, I have 4 corporations, like 1099, W2, K1s. Yeah, do you think I did an SBA loan on our commercial property here, and they had to see everything. And I thought, I will never do this again. I would rather pay a 0.5% higher in rate and be done in 2 weeks than ever have to give this much paper. My corporate tax returns are like 2,000 pages long because there's 44 state tax returns in with the federal, and they like, oh, I don't want to see the state. Well, everything kind of comes together. So I got to take it and pull it all apart. The time and energy and the exchange of how much you make per hour versus what you're trying to do, I'm already losing. So there comes a point, and this is true of anybody. I don't care if you work at McDonald's, if you can get something done for cheaper, you invest back into your time so that you can do the things that bring you more money and raise up your value so that you can do a $4 million loan and or have the time to bridge 3 loans together to make one. Most people would not be able to do the deal that you just did. They would have said, ooh, bridge. Ooh, wait a minute. How does a bridge work? And how does, can I do both of them? What's this Lensure place? How do they work? Am I really going to tell this quazillionaire that I'm going to do a bank statement loan? how are they going to treat me? And believe it or not, those people, they can see you a mile away because they're business-minded people. And if you don't know what you're doing, they're going to burn you in 2 seconds before they start handing you, letting you look at all of their stuff. There's a trust there that they're dealing with somebody of like mind. They don't just hand that stuff over to any rocket, loan officer who's making minimum wage plus a small commission that rents a house on the weekend. They might get tricked once, but typically they know how to ask the questions the second and third time. They don't mess around.
You're 100% correct with that, Rich. And I was so honored that he trusted me with this loan because he could have gone to anybody, honestly. He's got a lot of options, including his, private banker.
Sure.
But he was smart enough to know that his private banker wouldn't be able to put together a deal like this. And for the most part, I mean, when you're talking to borrowers of this ilk or income level, they don't want to tie up their assets at their brokerage shop to borrow against it, or
I know what you're talking about. Yeah.
It seems like a good idea on the surface, right? But they don't really want to tie up their assets. They want simple and clean. I did have a client one time who had about a 2,000-page tax return. And not only was I saving myself, but I was saving him because I knew, I could tell by his personality already, and he had 5, 6, 7 companies, and he was also an attorney. He did not want to roll out 2,000 pages of tax returns. I said, well, instead of doing this, let's just do this. And he's like, can we do that? Is that legal? I'm like, totally.
Is that legal?
Compliant. And I said, then I'm not going to sit here and go through your tax returns. Like, it won't even come through my email. It's such a large file,
Right, exactly.
So he was pretty happy about that. Believe it or not, I met him in my first year of originating, probably one of my, first clients within the first 6 months. And a funny story, I did a loan for his private advisor at Merrill Lynch. And he said, I've done a lot of loans. His advisor said to me, he said, I've done a lot of loans. And he was in the Bay Area. And he said, I have never had a loan be as organized and pretty much to the penny at closing on the settlement sheet as what your loan estimate said.
Nice.
I was like, that's great. He said, I got a client I'm going to send to you. Okay. Never did I think it was this particular client. And it worked out really well because I did about 4 loans for him personally. Then I did his ex-wife, his 2 sons, his ex-girlfriend. I mean,
hey, right on. Got a network there.
I'm like, how many other women in your life? I'll do them all, right? Just send them all to me. But, again, you have to know your product, assess the situation, figure out the tolerance level of your client, and to your point, know your value, because
absolutely,
my value is not sitting there going through someone's tax returns, page by page, line by line.
I agree.
I go right to the adjusted gross income line, and if there's, depending on what's there and how many pages we have and how many questions we're going to have, means if I need to go to next or not.
Sure. Well, talk to me about this. When you're not doing loans, flipping to the other side, because obviously we know you live out of your car. We know that you're always on the phone. We know that you don't shy away from hard transactions, and hard transactions can be small, they can be big, but you deliver. But when you're not doing that, when you finally get a chance to check out and just be Denise, what kind of things do you do in your spare time? In your time?
Yeah, so that includes my family.
Okay.
I have 3 kids. They're all amazing, and they're ages 19 to 25.
Okay.
All doing great. They think I'm nuts, right? Because I'm just, from the time they were little, they just remember me working all the time. But thank God for my husband, because he really pulls me back into reality and says, okay, you need to close your computer.
Okay.
And we have a date every Friday.
I like it.
Usually starts around 4:00, but there are days, sometimes by Friday by noon, he'll say, okay, we're starting happy hour at 3. I'm like, okay.
I like it.
Especially in the summer, the hotter it is, it'll start earlier and earlier.
Wait, a little disclaimer. If my wife watches this, I don't want you calling Denise, finding out how to get me out of work by 3:00 on a Friday.
saying that while we're sitting at a bar or having a glass of wine, I might
Ooh, I
have,
get in trouble for that one. I get in
I
trouble for that
might
one.
be known to take a phone call from clients, maybe one or two while we're sitting there. But yeah, it's honestly, thank God for him because he really keeps me grounded and pulls me back in. And he's just as busy in his profession. So having that time that we dedicate to each other is really critical.
Absolutely. I 100% agree. And, that's my wife has put up with this for this September will be 35 years. And Denise, it's
Congratulations.
been a blink of and I'm talking, we've been married for 31 of those, but 35 years of real estate. And I swear to God, I blinked my eyes a day ago and I was just this kid. And I'm like, God, that went fast. That's so crazy to me that I've been doing it this long.
But it's not just a cliche. I mean, it happens. It's so true. And when you think, now we're in the second half of our lives, right? And I mentioned this to a really good friend of mine who lives in Vegas. He goes, "You might be in the second half. I'm in the final quarter."
Yeah, I feel that too. We're on borrowed time. I mean,
Yeah, and you have to take advantage of life because it goes by so quickly. And it's tired. My husband's traveling this week, and as tired as I was last night, and I could have easily stayed at home and just worked on my computer and sent 3 more submission forms and files over to my processor. I had a happy hour date with my daughter. There's a
nice.
theme here. Sounds like we all drink a lot in our family, but I'm Irish, so just
There you
that's the way
go.
it goes. I'm grateful that I can go meet my kids for happy hour or whatever they want to do, and it's I think that's keeping everything in perspective for sure.
Now you live in a great state for the happy hours too. You're
We
probably starting
do.
to get some really nice weather.
It is
Um,
so beautiful here, but yesterday we had our first 90-degree day, and it's February.
okay, I'm in Georgia and it was 56, and that was a hot day for us. So I don't want no complaining. We're trying to get out there at the end of April for an event so I can get some of that heat. But I think baseball will be over, basketball's over. We'll find something to do. We'll find something to do.
There is always something to do here, and we won't continue with the 90 degrees, so you're coming at a perfect time. Believe me.
Oh, yes. For the record, it's going to get a lot hotter as it progresses. A matter of fact, we were talking some the other day when I played minor league baseball for the Seattle Mariners, and they used to I was like, what the hell is that in the pool? And they're like, oh, it's a big chunk of ice. And they throw these big chunks of ice. I'm like, what's that all about? And they're like, you wouldn't want to get in the pool. Like, it's too hot. And I'm like, okay, that's a job, right? Like someone actually makes the ice and they're like all over the place. And then I went to a resort there and all the local people could come pay a resort fee to come use their
Yeah.
pools for the day and stuff. And I thought, well, that's kind of cool. I was like, God, there's a lot of people here at this hotel. And they're like, no, these are like the local people coming to just use the facilities.
So I love that you know about that. It's called a resort pass or a day pass. And so when so many people were buying investment properties here, and that's why I love DSCR loans, love them, and really cut my teeth when I started on investors. And I think you and I have that in common that that's just a really great segment to
Yeah, I
specialize
like
in
that.
because they're not as emotional about the interest rate. The ratios have to work out, but they're not as concerned about 2.5%, which is just an anomaly and doesn't exist anymore and probably never will. But all my investors wanted to buy homes only with pools.
Okay.
Well, you know, because they could rent it for more. I'm like, here's what you do. If you're going to short-term rental this, you buy a day pass, you buy a resort pass, you include it as part of the package if it's a short-term rental. People love this. They can resort hop, right? Because if you buy a $50 a day pass, it's good for like maybe 8 or 10 different resorts.
Okay.
So how fantastic is that? I'm not laying in my own backyard every day. I get to go have Javier serve me
Right.
at a different pool every day. There's nothing wrong with this.
Well, I'll tell you a true story. I was at the Phoenician, if I remember the name of it, beautiful hotel, and I was sitting outside at their bar overlooking their 8 pools, and my wife and I are looking, and they're like running, and I'm like, why does everybody run? They're like, oh, we're going to need you to come inside. And I'm like, what's going on? They said, oh, there's a habab coming, and I don't know if I'm saying it right, but
Haboob.
haboob,
Haboob.
haboob. And I'm like, what the hell's that? And they said, look. And they pointed way out there. And I'm like, what the hell is that? It's like that movie Hidalgo, this mile high sandstorm. And it was way out there. And I'm like, well, how do you know? They're like, no, it's going like 100 miles an hour. It's going to be here really quick. By the time they got everybody in and locked everything down, it went from 100 degrees to trees sideways. Rain showed up. It was the weirdest thing. And then boom, it was gone. The trees right themselves. And I was like, what in the world was that? I have never witnessed anything like that in my life. Have you been to one of those in Arizona?
Oh yeah, they're pretty spectacular. But you definitely want to be on the inside watching it. It's
No way. I wouldn't have survived. I would have flew out. It would have been like Twister.
well, yeah, our Wizard of Oz with Dorothy and
Yes.
Toto, right? But and the witch goes up in the or however it works. But yeah, it leaves a lot of destruction. I mean, not just the palm trees are down, but it's a big massive cloud of dust and dirt and debris. Like think about it, it's swirling around and it's coming at you. So eventually that drops down and you will have shovels full of dirt that you have to get out. It's like, shoveling out snow, but and you'll see, dust and all over your car and things like that. But there, that season is usually end of June through the end of September. So given the fact
That's
you're
about
coming
when
in
we were
April,
there.
perfect
When it was
time.
smoking hot and they were like, no one wanted to be in Scottsdale. We're like, let's go to Scottsdale. We enjoyed it because we don't mind the heat, especially if you have pools and stuff. But it was like we had this whole resort almost to like 100 people. And it was cheaper compared because no one's going there. Um, but we experienced that and went to the Scottsdale Mall, which was like 8 stories tall and 5 miles long, and walked through there. It took 3 days to get through every store. Um, I have two questions, and you can answer them back to back. One is going to be for the average person out there that just says, you know what, I've been sitting on the sideline for 3 years, and the economy is, I don't know where it's going. I want you to tell me your thoughts on that borrower. What would you say to them? And then I want you to talk about there's going to be loan originators here. I shared with you 623 loan originators, the bottom 300, and I don't mean that mean, but they look up to the top and they say, how do you wake up in the morning and do what you do? Now, you don't have to give away all your secrets, but what is your mindset? What is your mentality? Is it a personal goal setting? Is it, are you crazy and you just workaholic? I mean, talk
There's
to
that.
both those things. Yeah. Talk to both of
Yeah,
those
so
type of people.
I definitely am a little crazy, but not obsessively so. When I do something, Rich, I go all in. My
Okay.
personality is if I'm going to be a loan originator, I'm going to try and be the best I can be. And that doesn't mean that I'm trying to make the top 100 list or anything like that, but really who I report to are my clients. Because if I don't make them happy or I do something that doesn't align with my values in terms of, speedy communication, being fully transparent and honest about what's happening, I'm not doing a good job. I'm letting them down. And that would crush me more than not having business. But when I do something, regardless of what it is, I go all in. I don't do anything part time. So, when I got started in this business, COVID there were pluses and minuses about it, right? So the negatives were, although Arizona was pretty open for the most part, but one of the negatives, they stopped all the realtor association meetings. But as soon as they opened those back up, I went to all of those, any of them I could find. And I wanted to meet as many agents as I could that were doing business in order to get their business. And it was hard because, they all had a guy or a girl that they've been doing business with for 5, 6, 7, 10, 15 years. And my subtle pitch to them was they might be really busy or they might not know how to do this. Give me a shot. And then before you know it, they started sending me business. And then once one transaction was successful, then I would get another transaction. I went to insurance brokers and agents. And that's really how I started my business, truly. And the success of that is still today that I network with a ton of agents, and have built my reputation. Agents come to me for their own personal business now.
That's a
There's not,
testimony right there. Good job.
yeah, there's not a time that I don't go speak in front of a group of agents that someone will either come up to me quietly afterwards and hand me a card, or they say, would you be available for a phone call later? And they're asking me about their own situation. I don't think a month goes by, honestly, that I am not doing at least one loan for an agent somewhere. Somewhere. I'm licensed, I think, in 6 or 7 states
That's right.
individually now.
Multiple states.
Yeah, and that's really helped. A lot of my business initially came from California. I don't get as much from California. Everything ebbs and flows, but I never wanted to be able to say no to anyone if someone came to me. And again, maybe it's that I'm a control freak. I don't think it is. My husband might differ with that opinion, but I never wanted to give up my loan to somebody else and trust that they would do as good a job as I would just because I wasn't licensed in that state. So, I get Washington, Utah, Arizona, of course, is my big state because it's my home state. Florida, I used to do
Good
a ton of
state.
business in Florida. Yeah. Texas is a great state. If you're going to be licensed in multiple states, you really have to understand the nuances of those states. They all have different just little nichey things about closing: wet state, non-wet state, community state, non-community state. I mean, community property when I say that. Attorney state. Florida's an attorney state. Know that because it's going to add fees on your closing that you're not expecting.
The one I hate is Texas and that little survey they got to do at the end. And it's always done at the end. They say, oh, well, who's paying for that? And I'm like,
right. Where's the survey? I'm
like, okay, you can pick that. I thought you guys handled that.
Yeah. Or, Texas has also got that little cash out weird thing about doing seconds. Yeah. So again, know your state. If you're going to do business there consistently, know the state regs. Don't just take the education and think, I don't need to know this. You really do need to know it.
Yeah, there's definitely, and Texas just keeps coming up because there's some nuances there.
Yeah.
All right. Talk to me about the borrowers out there that are just fence sitting because well, I can't remember the right word, but they're afraid to just even take a step. They're waiting for the 2.5% rates to come back or whatever, whether it's a refi or, values have held this time around, but sitting around, not getting into that next house. Hano, I just had his, Yadigar. We were talking to him because he was a top 25 again and actually 11th overall, but we were talking about, right now, you don't have a lot of competition when you make that offer. You can ask for a lot of things. Maybe you need a 2-to-1 buy down to buy you a little bit of time. You can get a lot of that right now, but yeah, you're going to get a little higher rate, 6.5, 7. Who knows? You're waiting for that 5.5 to 5.75. Well, then there's going to be 40 people online making the offers and pushing you, and you're not going to get one concession because it's going to be a seller's market, no longer a buyer's market. And his big thing is educating people, understanding what exactly is it that's holding you up? Because some people say, oh, I want a better rate because it's going to mean a lower payment. And it's like, not necessarily. What if I could show you that that's not exactly true and that you could accomplish the same thing today because of those factors that I was just throwing in? And it was interesting. He was getting ready to do some social media specifically geared towards that. But what are your thoughts on all that?
I think that's critical. And what I spend a fair amount of time on, as we all should, is educating not just the consumer, but agents, because I can write a prequal and put on the prequal that, we would like seller concessions for a rate buy down. And then the agent goes and puts him under contract, and I'll get the contract and I'll say, did you guys discuss concessions? I don't see anything on the contract. Oh, no, but does he need it? And I said, well, no, he doesn't need it, but this is what he would like to have, and this is kind of what he's planning on because we had this conversation. So I can't stress that how important that is to be really involved when one of your clients is making an offer. If I talk to clients, though, the second part of this is, and they are all waiting for the market to crash and foreclosures to start happening. And I still hear that every day. Is the market starting to soften? I think I'll just wait for a foreclosure. I mean,
You and everybody else.
yeah, I get the foreclosure list, twice a month. It's published here in Maricopa County in Arizona. I can get it for all counties, but I get those lists and I go through it, and I'm trying to see who's on there and if there are any good properties. I mean, it literally takes me 2 minutes to not even probably 20 seconds because there's less than 30 on there, and most of the junk is junk. It's interesting though when I see some of it, they're loans that they've had since 2007. Still some neg am loans that they just never got out of, and during that low interest rate period that we went through in 2020 through 2022, it worked for them, but values are not dropping, and that's the thing. Do you want to get into the housing market now at this price, at this interest rate, and I can show you how to save money and get 5% your first year, 6% your second year, 7% your third year when it's, you're at your full rate? Or do you want to wait 3 years and still only be at 6%? Because the days of us being at 3, 4, 2, forget about. I mean, it's an anomaly. The average 30-year rate over 50 years is 7%. So this is normalcy right now. This is a normal market. What you have to do is buy today, because if you wait a year or 2 years or 3 years, you've just lost out on $100,000-$200,000 in equity.
I find that people's incomes also don't appreciate as much as
No.
the cost of a house, especially if you're a state worker, federal worker, first time responder, however you want to say it, teachers. I know they could all be in that same category. But those wage earners do not increase at the same speed that the cost of real estate. And so by not getting in, and then now we have some different states like Florida saying, you and Hano were my last two, which are top performers, and people are going to want more of you as they want to know, how do you do it? Where do you do it? What's your energy level? And I think just by hearing you speak, they start to understand people need to raise their game. They really do. They got to get out of the shelter of safety and just raise your game. It's okay. You're gonna get beat up a little bit, but you're gonna rise up and find your path. But if you're not willing to try and you're just going to do this by osmosis where you sit there and hope your phone rings, that doesn't work for any industry that I'm aware of.
That is never a strategy. And so if I could leave with any words of wisdom to anyone who's frustrated or kind of sitting on the bench trying to figure it out, I mean, you got to get out there. And this business can be lonely. There is no question about it. But find your squad, right? And I'm not saying join a team, because if a team's not right for you, don't join a team. But find your squad of people, whether it's, you find a group of investors in town who have monthly meetups and you go and you just hang out and you learn from them, even if it's not to get a loan. If you get a loan, great. But find your squad of people. But you will never, ever get a pizza delivered to your door if you haven't called and ordered it first. So get out from behind your desk, get out from, your bedroom, and stop doing the laundry. And trust me, I'm big on doing laundry first thing in the morning before I leave. So you've got to be out there and find your squad of people and be positive. I think that positivity will spread. And, back to when earlier you asked me about clients asking about the 2.5%, 3% rate, I'm positive with them and say, you know what, if now's the time to buy for you, if now's the right time for you, then it's the right time to buy. The interest rates are always going to go up and down. But what's happening in your life that dictates now's a good time to buy? And I think if you can have that sort of positive spin always, and I'm not saying blow smoke up people's hiney, but just it's a mindset, right? And people want to do business with people who are engaging and who are positive and are educated and bring knowledge to the table. And I think those are the keys that it's going to set you apart when you're trying to originate. Find your own path. My path might not be right for Bob, Jim, and Larry, but if I can help in any way, I'm always open. Give me a call. But find your path, be positive, be educated, be knowledgeable about the market. You know, really quick, I know you want to wrap this up. I am a weekly commentator for bankrate.com. And yeah, I'm not always right, but I said, like loan officers and economists and television meteorologists, we get a 50-50 shot. It's either yes or no, hot or cold, right? So
Mm-hmm.
who's going to judge me if I'm wrong? But the editor said you always put a positive spin even if the rates are going up. I said, yeah, because tomorrow when you blink or sneeze, the rates might be going down. We're not going to live and die by the rate, and that's really critical to have that mindset.
I like it. All right, I'm going to close this out. I appreciate your time today. I appreciate you spending time. I know it's valuable to you. Thanks for giving me some time away from your family. Thank you for sharing your dog snoring with us. We know that you're human now, just like the rest of us, and we appreciate that. Denise, it's always a pleasure speaking with you. We need to do this more often. I think a lot of people get a lot of value out of it. I wish you nothing but success for 2025. You are a leader in what you do, and you find the business, and it's not an easy market, but you find a way. And I think that's the biggest thing, that top producers find a way. And that's, you don't just stop existing. But I just want to say thank you. Thank you that for anybody that spends time, whether it's here a day or 5 years, 10 years with Expert Home Lending. I'm just gracious from our platform standpoint that we get quality people like yourself. So thank you very much. But it's always a joy talking to you. I'm going to close this out like I always do with the Mortgage Baller's call to fame, which is stay thirsty, my friends. All right, take care. Bye.